There have been these long-held predictions that the surging production is going to push the market into a surplus. From your view, where are we at right now? Are we at some sort of tipping point?
Great to be with you, Kaylee. We are. You know, we're like a bunch of folks at the beach who've been hearing on the radio that a tsunami is coming, but kind of questioning if it's coming or not. Now, Rapidan is predicting or forecasting, to extend the analogy, a tsunami for quite a while. And we're starting to see it on the horizon. But it's a good news story for consumers, whereas a tsunami is a bad news story for bathers, right? We're about to cross through $3 a gallon. And by some metrics, we already have, according to Gas Buddy. And, you know, if you think about it, President Trump never was above $3 a gallon in his first term. We got close. So he enjoyed a $2 pump price in his term. And the White House is just overjoyed because, you know, whether they deserve it or not, a sitting president gets the blame when gasoline prices go up, and it gets the joy and the congratulations and the benefit when they go down. And barring a geopolitical disruption, the way my colleagues and I at Rapidan look at the markets, we think gasoline prices are more likely headed down further into that $2 range on a national average.
Wow, that's something, Bob. It's good to have you back, and I appreciate it. I'm looking at your note to clients predicting daily prints in the 40s by early next year when it comes to crude oil. You just mentioned where we're going in terms of gasoline. You know, as Tyler mentioned a moment ago, we're looking at increased production levels, but this isn't because of drill, baby, drill, right? This is because of many other outside factors.
You know, you're right. We are quite bearish in the near term, but I want to hasten to mention, Joe, what we're telling clients is brace for the great crude steepener, like a steepening yield curve. Near term, we've got supply growth running 3 times faster than demand growth. And that's only partly a U.S. story, as you said. That's an Argentina story. That's a Brazil story. Brazil adding almost as much as the United States, Guyana. But near term, we have a glut. But, and I hasten to say but, in the medium term, this market is going to tighten it up. So we're telling clients, prepare for this. Consumers enjoy it. We're going to go down, but then in the coming years, we're going to go much higher. We think we're going to go into a tightening market. But politics always about what's tomorrow. And tomorrow is likely to see a deluge of oil. And we have to ask ourselves, Joe, what stops crude oil prices falling in the 40s? And we think either OPEC Plus has to step up and cut production. They've been raising it. Or President Trump has to follow through, and he may feel he has the ability to do that by restricting Russian or Iranian oil exports with tough sanctions instead of weak sanctions. And Joe, if neither OPEC Plus nor President Trump and sanctions remove a lot of oil next year, it's the U.S. shale sector that's going to take it on the chin. And we'll have an echo of 2020 when the price will fall further to shut in shale wells. And that will not be a happy story. President Trump did not enjoy 2020. Gasoline was at $1.70 a gallon. The president was not happy, though, because we were shutting down U.S. production. Well over 2 million barrels a day shut down in a few months.
Wow.
Well, Bob, let's build on one of the geopolitical risks that you just mentioned, which is, of course, Russia. How are you watching this as you hear President Trump say that he's expecting to have potentially this meeting with Vladimir Putin? Zelensky saying that he also wants to come to the table. How is the calculus changing here day by day as we await for any sort of developments towards a ceasefire there?
Yeah. You know, we've learned with President Trump, he has an MO with these negotiations, and you have to take him pretty seriously. Consider Iran just as a template for what we're about to see with Russia. I think he could have signed a deal with Tehran. He could have lifted sanctions. He could have opened an embassy had they agreed to a deal. But instead, he became the president who ordered an aerial attack on the Fordo facility. I don't think any of his predecessors would either have done a deal or ordered an attack. He can go either way. With Russia, it's the same way. I think if President Putin doesn't agree to a ceasefire here, and President Trump's going to go the last mile and then a few hundred yards after the last mile for diplomacy. He really doesn't want to drop the bomb here, if you will, figuratively now speaking. Now, if they don't get to a deal in the coming weeks, I think the president is ready, this White House is ready, along with the Europeans, to impose tough sanctions on Russian oil, to do what they were unwilling to do in 2022, which is actually cut into Russian production and risk higher oil prices. Again, going back to the glut we were just talking about. If the president sees and the White House sees this glut develop, he'll be more willing to really crack down on India, Turkey, even China, and shut in Russian production, more willing than his predecessor was in 2022. So he can go either way, either a deal with Putin or, I think, very tough sanctions here down the road.
Well, as you predict an oil tsunami, Bob McNally, I wonder what that means for refilling the SPR. Should we not be bidding right now on $50-something a barrel, or to your point, eventually $40-something a barrel oil?
Absolutely, Joe, and it's just a shame. And I think there is bipartisan consensus even. We should be doing that. The problem is the money. When I was working for President Bush, we had authority to do what we call a royalty in kind program. Didn't have to ask Congress. We just said to those oil companies producing oil in federal waters, hey, pay us in oil instead of cash. And we filled it for the only time to the top. But Congress took that authority away. So I think one thing Congress should be working on with the president is either get that authority back so we can start taking those royalties in oil and fill it up that way, or even better, appropriate the money. We can't even open the government, as you've been talking about all day. But if we open the government, it'd be great if we could pony up some money and refill the SPR. Absolutely.
Bob, in the final minute that we have with you, we had reporting out from Bloomberg News this weekend that India is actually making progress when it comes to a trade deal with the U.S. We've heard President Trump suggest that India could abandon its imports of Russian energy supplies. Of course, 25% of the tariff currently in place against the country has to do with its imports of Russian energy supplies, the so-called secondary tariff. But in your view, how realistic is this? Is India going to move away?
I think they will. You know, India took no Russian oil, remember, before President Putin invaded Ukraine, and now has become the biggest customer. And of course, India has been having a wonderful time enjoying cheap, discounted Russian oil. Who wouldn't? Who wouldn't enjoy a 15% discount on pump prices if you can get it over your neighbors? However, if forced to choose between enjoying this discounted Russian oil supply on the one hand, or having economic relations and trade and so forth, much less stable political relationships with not only the U.S., but the EU. The EU has some tough sanctions coming in on India in January. I think India will side with maybe letting go of that enjoyable discount and preventing a sort of worse and more costly trade measures on the other side. It's a cost benefit, and I think they'll quietly, they won't enjoy it, they won't say it publicly, but quietly I think they'll move away from Russia.